What's up guys, welcome back to the channel. Hope you all had a fantastic Thanksgiving. And in today's video, I want to first begin with giving you guys an update on my new portfolio. I recently made a video going over the pretty major changes I made to this portfolio in the beginning of November. And I want to give you guys an update on how it's doing versus the market over this past 3 weeks. And then finally, I want to talk about JEPQ and more specifically why it's not yet in my portfolio. Okay, but let's start with the performance of my portfolio. So over the past 1 month, the S&P 500 is up 4.5%. It was a very positive past 30 days. And over the past 1 week, it is up about 2%. Now, in contrast to that, here's the big reveal. My portfolio in the past month is up 5.09%, and over the past week, 1.23%. So far, it's only been 3 weeks, but it seems like my portfolio is tracking very close to the overall market, which was a major objective of mine. Staying on the 1 week time frame, we can see how each section of my portfolio behaved. Surprisingly, during this time, the growth assets performed the worst, up just 0.22%. Value did the best, 1.8%, and my S&P 500 assets went up 1.63%. Changing this to the past 1 month, this is the corresponding performance. And again, growth assets are doing the worst, value the best, and the S&P is somewhere in the middle. And you know what? Let's go ahead and click into each one of these sections because I know you guys are going to want to see it. So over the past 1 month, Jepi actually did better than its benchmark. For my value assets, both SCHD and Divo did absolutely amazing. These are two of my favorite investments of all time. And then in the growth section, this is the performance of VGT versus BST. And this leads me to the main topic of this video, which is why I have BST here instead of JEPQ. So JEPQ, the benchmark for it is the QQQ. Over long periods of time, it aims to have a similar total return when you factor in its very high dividend. And so far, over the past 6 months, just looking at the price change, it is very similar to its benchmark. Now, the BlackRock Science and Technology Trust doesn't have a direct benchmark like JEPQ does, but VGT is a very similar market segment. And over the past 6 months, BST has done significantly worse than VGT. And the last comparison I want to do here is JEPQ directly against BST. And yeah, here we can see that they do track in a very similar direction, but BST has been beat up a little bit more. So of course, considering that performance, it is rather tempting to ditch BST and go to JEPQ, especially because the expense ratio is a little bit less with JEPQ. But I do have 2 main reasons why currently I prefer BST over JEPQ. The first is that I already invest in Jepi and they use the same exact strategy. And yes, so far the strategy at JP Morgan has been very successful. We can see here over the past month, Jepi has outperformed the benchmark, but there's no guarantee that's going to continue into the future as the market changes. And honestly, I'm just hedging my bets a little bit in case the strategy fails. I don't want to have exposure to it via 2 separate ETFs. But this might change in the future because eventually, once this is listed on M1 Finance, I do want to invest in XYLG instead of Jepi. Now, I know everybody loves Jepi, but I like this because it's systematic. There's no active management, no specific strategy. They just cover half the S&P 500 with covered calls, and the other half is the index. It's super systematic, you know exactly how it's going to behave, and ultimately we are going to swing back into a bull market at some point, and XYLG will have better price appreciation than Jepi. And to prove that, here's the total return of XYLG up until the market correction, and we can see that it appreciated 26.62%. Now, in the same time period, here is how Jepi performed. Jepi did respectable, up 23%, but it did lag behind just the systematic passive approach of XYLG. So yeah, once XYLG is added to M1 Finance, there's a high probability I'm going to sell Jepi and put the funds into that instead. And at that point, I'll be much more open to adding JEPQ to the growth side of my portfolio instead of BST. But the other reason why I still invest in BST is because every time I look into what I'm actually investing in, the actual holdings, the covered call strategy, I like what I see. BST is just struggling in this market because the entire tech industry is struggling. So those are the reasons why I don't currently invest in JEPQ. I think overall it's a very high quality income technology based fund, but I already invest in Jepi, which has an almost identical strategy. And once the market finally does turn around and technology stocks begin to appreciate again, I have a conviction that BST is going to perform better in that market than JEPQ. But of course, that's just my opinion on the matter. Let us know what you think of JEPQ in the comments below. If you're still watching and enjoyed, leave a like, subscribe for more, and I'll see you guys in the next one.